Well, good evening, boys and girls, ladies and germs. Thank you very much for joining us on a Sunday evening. I hope everybody had a great weekend and looking forward. Hey, Malcolm, thank you very much. Last week I was told that the volume was a bit low. Is it okay here tonight before we get started? All right, John J. Hello, hello. We're ready for another trading week. All right, let's get started then. I want to start with a disclaimer said that trading involves the risk of loss of capital. Make sure you can afford to lose whatever you're trading with. And that nothing said tonight is to be construed as trading advice. It's only an idea of what I think might be good for me, and it may not be appropriate for you. This is included in the presentation package. Let me post that out again. I'll post out the earnings list. I'm not sure if I've actually posted the slides here, but we have. This is my YouTube channel. Link. And later this evening, a recording will be posted up there. Stick around to the end of the presentation. There's a special offer for anyone who may be interested. We're going to go over the economic and earnings calendar, some market overviews, some trade ideas, some Q&A that are not stock specific. And I'm going to have to eliminate a look at your stocks tonight. I am slightly under the weather. I basically had to get out of my deathbed to come on over here, so I do apologize, but I was not about to let you down. But I'm going as much as I can. Hello, Arnaldo. All right, economic reports for the week. You know what? That is not. That's not the right one. Okay, hold on. All right. Give me a second, folks. I'll get us going here. Trading. Good trading. Well, that is the wrong week, and I know that I updated it. Let me bring up the PowerPoint. Well, dirty words. I do have, this one chart is wrong, but I know how to fix it. What I will do is I'll go over to the economic reports. Well, Econoday. Calendar. All right, and here we go. Jerome speaks on Monday. He speaks a lot next week. Basically 2 o'clock on Tuesday, 11 o'clock on Wednesday. And the reason I knew immediately that these things were off is that we don't have the FOMC minutes on there. So the minutes get released on Wednesday afternoon. Yeah, GJ, I apologize. I have no earthly idea how that happened because I know that I copied it over. I probably didn't save it. Silly boy. Shows you what happens when you're not feeling well. You're not clicking on all cylinders. And when you're not clicking on all cylinders, you shouldn't probably be trading. Shouldn't probably be trading, but not trading tonight. We've got CPI jobless on Thursday, import, export, and consumer sentiment on Friday. Other than that, there are not a significant number of economic events for the week. Okay, we will get into earnings here. None on Monday, Wednesday, or Thursday that are of significance because they don't meet either my trading criteria or volume, price, or the like. So I will point out that upcoming earnings starting next Tuesday, we will have next Tuesday, let's get down there, JP Morgan, Goldman Sachs, Citigroup, United Health, and that's when earnings season starts in earnest next week. So you probably want to be here for next Sunday's presentation or whatever. Historically, the first part of October, the first half, is historically a poor time to trade. The best time to trade is when we get into the traditional, I guess it's Santa Claus rally, would be mid-October to the end of the year. That isn't always the case. Well, Alice, for me, it's not necessarily a company that starts it, but for me, I look at the banks, the major banks, JP Morgan, Goldman Sachs, and Citi. They almost always show up on the same day. They are showing up at pre-market on the 15th, next Tuesday. Sometimes they're late in the week, Thursday, Friday, so they kind of move all over the place. It's somewhere around mid-month. Sure. A lot of people used to say, well, Alcoa used to kick us off. Well, once Alcoa didn't become much of a player in moving the market, I went off of it and went to the major banks anyway. Wells Fargo is also on that date. Let's see what else is on that date. United Airlines, Johnson & Johnson, maybe, I'm not sure. Charles Schwab, Bank of America will be the next day. So then we start to get in. Where I am pulling my calendar for earnings, Delta on Thursday of this week, I'm not showing it. So right in here, there's the Seeking Alpha, which is the easiest for me. Another way to track it is on briefing.com. So, okay, calendars, earnings. Now, they have just recently changed their format. ACC. Now, you talked about Delta on Thursday. Now, that shows on Thursday before the bell. Let's see on Thinkorswim whether Delta. You're absolutely right. Delta should be on that list. Let me go over on Thursday. I'm going to add that to the list. Thank you very much. I've just recently transitioned from a calendar based off of briefing.com and gone to Seeking Alpha. Well, no, in this one, if you go to Seeking Alpha, we're looking at 10.9 before. It doesn't show up at all on the list. And another thing is they have Costco on 10.9 Thursday after the bell. It was last week. So they've got some mistakes in there. The reason I had to go to this one is that I can copy and paste this by converting it over to a spreadsheet, and the spreadsheet directly in. And when we get hundreds of stocks, I can't type them all in by hand. Well, I can, but I don't. I'm not going to. Enphy should be on the list for Friday as well, I suspect. So I'm going to have to do a little bit. See, if I tried to copy this over, it shows all up as in mixed up lines, and I'm unable to automatically copy it over. So I'm going to have to come up with a way that works a little better. So hang with us while we're in the transition period. What do we say? Enphy is probably on Friday as well. All right, let's jump on over to the markets. We know what those are. I've got Delta up. Let's start with crude oil. Crude oil jumped up quite a bit when we had that attack in Saudi Arabia, and immediately it went down when Saudi said, no problem, we've recovered. Some people say they don't believe it. Well, all I'm following is the price. I know that they claim to have a oil reserve about 4 to 5 times what the U.S. has in their oil reserve, strategic reserve. So they could tap into that if they had to. We hit 51. We're right now, unless we get over something in the neighborhood of 55 to 57, we're just going to be in a dead cat bounce, a reversion to the mean. So this is just a couple of up days, maybe in a downtrend. That's what I'm going to be seeing. The good news for us is that prices at the pump are going to be lower. Gold, you see here that I've got it in we basically went up, sideways, up, consolidate, up, and then kind of rolling over. This is making lower highs and lower lows. We're in a downtrend until we can break through that, and probably for me 1540 to 1550. Yep, thanks Dolores, appreciate that. We're still in a pullback downtrend. Now let's go to a weekly chart. And this could be considered a bull flag. But I still believe that we're going to have to get up over this, the levels that we were talking about, 1540 to 1550 before we're out of the woods. Okay, let's move on over to the S&P. We're down 12.5 in overnight trading. Little right now an inside day. It is way too early to be saying that we're going to be down today, but again, this is my rough idea of the downtrend. Some people are going to criticize me because they say, wait a minute, why aren't you taking the tails, the topping tails over here? I don't do that. I normally try to line up the body of the green on the way up and the body of the reds on the way down. So this would be kind of a channel down. And we're going to have to break at least through 29.50, which is my old support level that we broke through last week. And more than likely, probably going to have to get through 29.80 to 29.85, and then I might be a believer. So we'll see. Price is going to tell me whether the bounce is real or not. We're probably not going to be in a straight line up, as if we're also not in a straight line down. So we could go up here and do a reversion to the mean somewhere in the middle of this candle around 2960 or so, and then roll over and either go back and retest the lows, recent lows, or pull back and hold and establish the fact that it's trying to change trend. Time will tell. Right now we're in kind of no man's land. Dow looking very similar to the S&P. Not going to waste any time on that except for levels. NASDAQ, a more gentle pullback. We're pretty much at the trend line. Let me draw one right here real quick. This is an approximation really of where we are. We got up to it on Friday. We're going to probably have to get up into this 7800 to 7820 level, and then probably pull back, establish a higher low. Somewhere in here, higher highs, higher lows is an uptrend. Gonna need us to establish that new bottom. Now we come to the problem, one of the two problem children. All right, come right back to you, Michael. Now, not all the indices, you actually led me into this, are behaving the same. Because as you can see here, the Russell, or IWM if you wanted to do that, is nowhere near. This one really fell out of bed, was not doing any intermediate rallies when the other indices were trying to do that. So what we've got is, I'll call it a little bit of a bifurcated market. We've got the big stocks, the multinationals, the dividend payers, all in the S&P and the Dow and the NASDAQ 100. They're doing much better than the small cap, the Russell 2000. The Russell 2000 back here in August was the laggard to catch up, and over the last year or 2 years it's been the laggard. It does play catch up eventually, and you could actually kind of play that if you were aware of the differences. Now, Michael asks, if all the markets do kind of the same thing regarding trend, why do I study all 3 or 4 of the indices? Because unless I look at it, I don't necessarily know that one is different than the others. And I just wanted to show it. I do this and show it every, because this is what I go through every night and every morning to see how we do it. And I use the futures more than I use the spiders, diamonds, Qs, and IWM. Primarily because we have fewer gaps. They trade pretty much 24/5, 5 days a week, 24 hours a day, except for a short break at the end of the day. And it's really a pretty good indication of where we are and where we're going. I don't get fooled by gaps a lot. Let's look over at the VIX. The VIX is a fear index, and we spiked up to the mid 21s. We pulled all the way back down to 17 after being around to 12 to 14 earlier. Back over here in August, we had kind of an elevated VIX level, and it bounced all over the place. We had no trend on a daily basis. Now, if I want to go to a 30-minute chart and I want to zoom in a little bit, zoom out a little bit, we had tradable moves in it when you went intraday. But as far as trying to swing trade traditionally on, say, A daily chart, not possible. Not without a lot of luck. Now I'm really talking from 8/2 to about Labor Day. All right, let's move on. All right, let's move on to our presentation again. All right, I have some long trade ideas. I have a few short trade ideas, and I've added a new category tonight called Dead Cat Bounce. And these are potentials for a bounce off the bottom, and if they get up to an intermediate level or reversion to the mean, they could set themselves up for an excellent short. So we'll be going over all of those just right now. All right, bring this up. Here's my longs. I'm going to go over them alphabetically. Here's Apple. Apple basically got up to this, actually it's 229 level or so, all-time highs. Normally on their announcement, whoops, that's a weekly. That's why I had the 225. There's the breakout. The one thing that's really would be a little disconcerting to me is that the balance of power from Worden Brothers, which looks at institutional interest, is negative balance of power. And not a significant number to the downside like the reds over here, but it's not flat like it was over here in the movement up to their new announcement of new iPhones. So this could cause me to be a little paused. I'm not in Apple at all. I'm probably not going to be in Apple until they move up, pull back, show that they can hold 225 level. Celgene, bumping up against 100 again. Let me pull this down. It has basically, I want to look at the weekly chart. It has 110 written all over it. Now, could this thing bounce around between 100 and come back and then go back up towards 110? Yes. Again, I tend to use the breakout levels, make it break out, do an extension, and then pull back towards the breakout level, form another bottom, and show me where it's going to hold. So in this case, let's just say I've got a marker between 100 and 110. I would expect it to come up here, march up here a little bit, and then pull back, and say that the strongest of the strong will not pull all the way back, but it'll pull somewhere near that breakout level, and then start its move up towards zigzagging towards 110. So I would want to try to get in around here. Why? When I go along in here, the stop, if I were long, would be marched up, but support is all the way back here, slightly less than 100. But there's no proof that that's going to hold. I'm waiting for proof. I try to take the lower risk options for me, the lower risk trades. Mel asked, where do you see Apple pulling back to, please? You guys were saying not to buy Apple. Well, no, we're not saying not to buy Apple. First of all, we're not providing any recommendations at all. I'm telling you that what I do is exactly what I explained. And for Apple would be, I would wait for the move up and wait for some pullback. And the reason is, it's going to pull back at some point. And it'll either curl right here, or come down in here and either curl up or continue lower. Right now, it hasn't proven itself as to what level is going to act as support. I want it to tell me which of these three scenarios is going to come into play. Is it going to do a higher low? Is it going to come back to the breakout level? Is it going to break down below the breakout level? And once it tells me that, it's the elephants jumping in the pool. They make a big splash. All right, let's go again. D.R. Horton. The residential construction companies are on fire at the moment, primarily because interest rates are forecast to go lower or stay low. And some people are going to potentially jump on the bandwagon and buy, and or the companies are going to speculate and build spec homes. Well, they're pretty. If you look at the home residential construction, these guys are basically been on fire for the last time. MDC, TriPoint I wasn't interested in. Let's look at actually the capitalization. All right. Lennar on fire. Pulte Homes, Toll Brothers, KB Homes, Meritage, MDC. So you can see that most of these are much, much higher. I do have a list of 46 market sectors, and they go, let's do the X sectors. I have more than just a little bit of the X sectors here. XBI, ES, whatever. And I go through these every night to see if something catches my fancy. Well, if the home builders are doing well, and home builders here, XHB includes more than just residential construction. What it includes are things like Lowe's and Home Depot, the paint companies, stuff like that. And then what you can do if you have TC2000, and this is the beauty of having this tool, is I can go to the components, and then I can find out who's on fire. All right, so let's go back. Go back to our long list. And let's go to Dollar Tree. Dollar Tree, I think some people jumped in on Friday. I did not. I don't really like to initiate new longs, swing longs on Fridays. It's just, I prove it to myself by having a journal that if I initiate new longs on the Friday, my performance is quite a bit lower than if I wait and do it Monday through Thursday. All right, but this one looks pretty good. If we look at a 3-day chart, you can see how we did a little bit of a consolidation near the prior swing highs. It looks like we're trying to break out. If you go to a weekly, and I don't normally use the weeklies as much as I will look at different time frames, up and down. I'll use the daily. I'll use a 3-day chart, and I'll use a 60-minute and 2-hour charts to see how we're doing. So I look at multiple time frames to see if I can discern something going different. Patrick, if you're asking for a stock, I'm not going to go over those tonight. I'm sorry, unless it comes up here. Jabil Circuit, you can see how we did a breakout, and we did our pullback here, and the pullback came basically to the vol stop at 33.89 or so, and now Friday would have been a good time to initiate a long, and with the first target somewhere at or above 36, with the stop having to be below Thursday's low, and potentially you could raise it on Monday if we open up positive. KB Homes, another residential construction. MDC, another residential construction. And that brings up a point. Be very, very careful that you don't get too heavily loaded in one sector. So you may have 3 or 4 that look good, or say maybe you have 5 that look good, but 3 of them happen to be in the residential construction area. Maybe only pick out one of those residential construction, because if they start to sell that off and you've got all 3 of them in your portfolio, you're going to get smashed. So diversify a little bit. Even though we're not investors, traders also need to diversify a little bit. Trade that we put on Friday, looking for a retest of 186.50 area, is NVIDIA. It's basically did a doji after a good move on Thursday. Dojis after a big swing move like that, some people say it's approximately the midpoint. If that were the midpoint of the move up, that move up so far is $9. And if it were the midpoint, $18 would take us to a little bit over the swing point up to about 191. If I go back and look at a weekly, we get over this 186.50, and I'm going to change that to 50. If we get over this level here, we're probably heading to the 200s and maybe much, much higher. This 262 will probably become 280. This number right in here, probably 210.50. I'll mark that up. All right, so that's kind of what that I'm looking at when I saw that. I said I'm going to initiate an options trade. I have a credit spread. Yeah, if you look at a 3-day chart, it's trying to do a consolidation. If you look at a weekly chart, definitely so. If you then go to a monthly chart, which I don't normally do, you can see how it is, but it's got to get up over this 186.50, or we're going to establish an equal high and maybe even a lower low here. We're really in a consolidation period really from November of last year. Yeah, I mean, this is where multiple time frames, you probably already looked at it, Chris. I had not looked at the monthlies, but I had looked at the weeklies, and I do know that NVIDIA was trying to fight off the challenges from AMD for new graphics cards. I think they're holding their own, really, looking at it just from a pure technical perspective. They charge a lot more. The value proposition for most people would be AMD type of graphics cards, but NVIDIA has RTX if you like that sort of thing. I'm not heavily into gaming and definitely not into ray tracing because I'm not a gamer, but even for most gamers, ray tracing is not in most games yet. I'm not sure when they're going to be. All right, well done there, Chris, and thanks for bringing it to our attention. But I noticed kind of the consolidation in here, where we basically were looking at that as our base consolidation. We weren't going back further, but just really, yeah. All right, PayX. PayX is also kind of consolidating here. We have a little bit of a void above 84.50. If it gets over there, we're probably running to 86.5, so $1.50. The only problem with this one, as in all of them, is what's the reward versus what you have to risk. Where would a good stop be? Well, in this case, if I went long, I'd have to have a stop below about 83 and a half, a dollar back. Probably not a good reward to risk unless I can get a pause here around the 84.50 or a pull up above it and pull back and then go again. Go, pause, go. So that's what I'd be looking for. I'd look for a move up. Let's get this low dilly. I have no idea why it didn't take. Anyway, break above 84.50, not too high. Pull back, show us that it's going to hold a level, and then go long here. I know it's a broken record, but that's the lowest risk entry, and those are the ones that I do. Sedge did a move up, consolidation. I want to look at a 3-day chart. You see a little bit of the pullback here. If I do a poor boy Fibonacci, I do the quadrant lines. It moved back to about the 50% level, which is cool. It went back up and retested the prior swing level around 87.5 and pulled back again. We'll see what happens if we put the weekly on. Again, we have the 50%, we have the retest, we have the pullback. Sedge, aggressive traders could go long on a Friday, looking for first target around $90.50. And that would be pretty cool, because one of the things that a lot of people do, they say, well, I have to be below the Thursday low as my stop. And I'll say hockey pucks. No, you don't. And the reason you don't is that if we move up like this on Friday, and let's see what happens when I draw. It moves like this on Monday. It moves down on Tuesday. Do I have to let it get all the way down to here before I get out? No, I say no, no, no. And the reason I say no emphatically is that I expected this thing to go up and retest this prior swing level, maybe then pause or pull back, and to break out. If it doesn't do that, if it gets up in here and maybe stalls and then rolls over, it's not doing what I expected. I need to exit stage right. Now I need to give it a little bit of room, but I'm not going to give it probably more than a half to 2/3 of this candle here, because it's not doing what I expected it to do. And even if it pulls back and it starts to curl back up, I can get back in, especially since we have no effective commissions anymore. We'll have a whole different way of thinking coming up. All right, I'm going to skip over SPLV for a moment. It's a special case. Sina did a breakout on Friday, looking for it to potentially go up as high as the 43s. I'm looking for it to be a zigzag to go up there. Looking for a move up, pull back, move up, pull back, something like this, because we've got these levels, the void, and I'm looking for that move up and that pull back, and it proves to me that it's worthy of my money and my interest by showing that it has support at a level that I can put my money to work and have a very tight stop. Last one here is X-ray. Why I have X-ray on this list is that we basically have a void from this 53.75, 54 level up to about 56. So we've got $2.50, 4 to 4.5%, and it's above the 50. I think this I think this has the capability to move very rapidly because the move down from 56 to the level we're at, 53 to 54, occurred in 2 days. There's not a lot of trades at any one level along that drop, except for potentially this area where we had the overlap. This is where what I can do is I can look at the daily chart and this candlestick and know that it got down to a low and then came up to a high on the next day. I know that we had some sort of rebound and overlap on the days between the 31st and the 1st. Let's look at a 2-hour chart. And the 31st and 1st of July. All right, and see where I had that highlighted? Let me move this over. Move over to the right. And you can see how we had a little bit of a bounce. Not much. Now when I'm looking at that on a 2-hour chart, I'm going, that's probably not going to be a lot of resistance. So I stand by my hypothesis that we break out over here, we're probably going to make a mad dash to 54.5, wobble, and then continue the mad dash upwards. Now I'm going to check out and see if X-ray has high short interest. The answer is no. All right, I'm going to point out SPLV. For those who want steady Freddy, maybe you have some extra money that you have a large cash hoard and you don't want to put all your eggs in 1 or 3 or 5 baskets. SPLV is where I've kind of parked some money for my mother. It basically is the low volatility section or dividend payers. And I'm going to show you what it's done on the area chart. This is a weekly chart since 2012. Up 32 bucks, 125%, compounded 11% a month, a year. And all I had to do was just park it there. Yes, we had some dips. I had enough in there. I just basically let it ride. I even let it ride here in the December time frame. I actually added on when we started to do the move up. I only have a fairly small portion there, but it's a way to park something. This has been kind of a winner for me. Now, what will make this change is when we get these moving averages here. I'm using the 8 period, and no, I'm using the 20 and 40. Let's do the 8 down. I was doing something else the other week. When these start to look lower, like here in December and October, November, this looked a little weak, but I had a lot of profit in there, so I hung on. But this is a strong uptrend, has been since February. Again, it's a weekly chart. Buy the dips. You know, if I compare this one, let's add a comparison chart of the S&P 500. See what happened in the dip here? The S&P 500 went way, way, way down. SPLV only dipped half of that. And on the way up, the SPX went way up here. SPLV did not participate as much in July, but it's all swings and roundabouts. That, if you're not actively trading it, it's not a bad one. All right, enough said. Let's go on over to the shorts. I only have a few. I don't see. Oh dear, I've got some of my. All right, Starbucks. Starbucks is one of those that wasn't on my long portfolio until it broke down. Started doing. This is basically setting itself up for the blue ice failure as it kind of consolidated here. If I go to a 3-day, you can see it really well. It kind of paused at this 89.25 level, and then it gave it up. It went down to 83.50, which was the prior support level. It's trying to bounce. That 50-week moving average is, and where it bounced, it's really price over here. I'm going to tell you, people who put put a lot of credence in moving averages, I think they need to rethink this. What they need to do is look, and when they see the moving average, and if something bounces on it, look to the left and see if it has support. See if there's any price level over to the prior side that, like this $90 level, was because of this consolidation here to the left. This 83.50 was because of this consolidation to the left. It wasn't because of any magic moving average. The magic moving average might have got somebody's attention to look to the left, but that's all I use it for. Unless we can change this trajectory, we're going to bounce up a little bit and we're going to roll over, and we may have a date with the 200 or the 200 area down here around 78 or lower. All right, let's go back to the daily. There's the 3-day, and there's the weekly. Now, I am not short Starbucks any longer. I made my money on this drop down. I did not make money on this first one. I made it on the second one. I'm waiting for a reversion to the mean, somewhere between the 8 and the 17 exponential moving averages, and I'm going to look, and it's going to prove probably on an hourly or a 2-hour chart that it's going to roll back over. All right. Twilio is one of these, it's just kind of, it moved down, consolidated. It moved down and consolidated. Is it going to make a third move? Well, the markets tend to like to move in threes. So anything that breaks below about 105 or so could go down quite a bit. But the problem we've got here is that we're going to need a pretty substantial move down. Let me see that I'm on a 1-day. Yes, I am. I would love to see the bounce continue all the way up to about 115 to 116 and then smash over. Then I've got my first target would be down in here on the prior lows. All right, somewhere down in there. If I could start from a short up here, then this has a pretty nice target and a pretty tight stop. If I do it from right here, well, I probably only have what? Well, I have $5, 5%. I guess that could work. And my stop would only probably be $1 or $2, so that could kind of work. So either one of those could work. Yum, coming back up to the 50. I'm looking for this one to roll over and potentially attack the 111 and 110 area again. If it breaks above this 115 and gets followed through, that short trade is canceled. But I'm going to make it roll over first. I'm not going to anticipate it. How am I going to look for it? I'm going to drill down to a 2-hour chart or a 1-hour chart. On the 2-hour chart, you can see we've got consolidation in the 115s. Okay. Why? Why? Let's go to a 1-day chart. There we are. It got up here on a bit of a rally, rolled over. Now let's see if it can get back over this $59 to $60 level. If not, we'll get at least a retest of the $55 level, maybe lower. All right. Now, we need to look at the potential dead cat bounce stocks. Accenture. Move up anywhere up into the middle in here would be kind of a reversion to the mean, even as high as the 50 period moving average, and then look for a rollover or a breakout. I wouldn't be thinking long unless it gets over 196 though. Intuit. Lots of consolidation. Look at a 3-day chart. Oh, if he gets up here to 271 and then rolls over, that wouldn't be so bad. MasterCard. Yeah. Hit to the 50. Balance of power showing. There's not a lot of confidence in a long here. All right. Weekly, it's not so bad, but I'm not a weekly trader. I'm a 3-day, 1-day, intraday trader. Moody's. Moody's is setting up for a classical blue ice failure. And what, well, not exactly classic, but pretty close. A classic short for me is you break down from some obvious support level, break down here and go up, do some sort of reversion to the mean, and then fall all the way up to the rising 200. Notice you have a line right here, which is my moving average 100 symbol. I knew that when my son was attending school up in New England, while at sporting events, I chatted with some fathers who were hedge fund managers. And they said they had watched the 50 and 200, they watched the 100. And I asked them why, and they said, because a lot of times it will pause and then blow right through the 50, but then go to the 100. Or on the way up, pause at that 100 or whatever, and after blowing through the 50 or the 200. So I plotted it, and I know for a fact that the blue ice failure here, this is about a 50% level. Let me get rid of some of those right there. This area right in here is about halfway between those two. It basically is telling you, I'll go about halfway down, I'll do a reversion back up, and then continue the move lower. This right here has not broken the downtrend. It will not break the downtrend for me until we definitely get above 210, and maybe even higher. That is most definitely the trend for me. So I can get above that, probably above the 50 period moving average, only because, whoops. Notice this wedge and it broke down. Yeah, but again, I don't expect to be in the trade in about 2 weeks, but in about 2 weeks' time, it could go up and it could go down in anticipation of earnings, or it could wobble around here and earnings could be the catalyst to go lower. You're absolutely right. Especially since we're coming into earnings season again. Heavy next week. Really pay attention to earnings dates. Next one here is SPGI. Looks an awful lot like really the markets. Let me show you SPX. What do? We dropped down, we pulled back up. We pulled back up to what? We haven't even got to the trend line yet. Hate to say this, but United Health is not looking very good. It's trying to do a reversion to the mean bounce. Balance of power is negative, so that's not positive. The volume here to the downside, that's not mom and pop selling. That's institutions finally giving up. from a non-technical perspective, but from a fundamental perspective, they're worried about changes to Medicare or Medicare Advantage. My wife's insurance agent. All right. Okay, let's go back to the slides. Said that we'd have a teaser for you. There's a link out to a 60-day, 2-month offer for $49, basically $25 per month, to go into either the Hit and Run Candlesticks rooms or the Right Way Options room. Doug, who runs the Right Way Options, is the best options trader that I have run across in my 20 plus years of trading. I have no reservations. He can take people from knowing nothing about how to trade options and give you low risk entries. So if you're interested at all and you have a small account or whatever, seriously consider signing up. If nothing more than you do is you sign up for the 2 months, and you can, amen, Alan, you can go in and you can learn how to trade options. Now, I think both the Hit and Run Candlesticks and the Right Way Options rooms are, at this rate, are absolute steals. They're giveaways. All right. Steve A. I don't have access to that. You signed up at the regular rate yesterday? Darn. I don't know. I'll have to try to get a hold of Doug, or 150-ish. Right. We'll have to. Can you send an email out to? Let me get the Hit and Run Candlesticks room. The contact us. Go to Hit and Run and the contact us, and fill that in. And if you don't get a response back in 3 days, do it again and said, "Darn it, this is the second time." We can correct this. Steve. All right. We're not here to rip people off. No way. All right. You want to follow me and just me? I have a StockTwits account that I post to a few times a week. I don't overdo it. You're not going to get absolutely slimed. But I do have a YouTube channel. For the next Tom, it's for first time and only one time members. Existing members, it's really, you got to understand, this is to generate new business. So it's to give people, some places offer free trials, or this is our discounted trial. And we think that you're probably going to need a couple of months to figure out, whether it's worth it or not. I don't get any of the money from that. I'm just basically what is it? I'm a guest moderator, if you will, and I also do coaching. For the next 6 weeks, I will be doing these. Thanks, Ed. For the next 6 weeks, I'll be doing these Sunday night sessions, and every one of those will be in on YouTube. I will sometimes post videos that I've done during the week. You can do both. Let's go back up. Hit and Run Candlesticks runs all day, but usually we'll take a lunch hour or so. So you'll open from about 9:30 to about 11:30. Now, Right Way Options, they'll open up, and then they have a daily training session. This is the part that just really boggles my mind. Doug will bop in the morning and tell you what's going on, but at 11 o'clock, he sets from 11 to 1, and sometimes it runs over, for 2 hours. You get daily training on trading options. He'll talk about setups, what he see, and you really can't go wrong. But I wanted to let you know that if you sign up for both, you can. The problem would be trying to be in both rooms at the same time, because both of them run all day, except Right Way Options tends to only run from about 9:30 to 1:30 most of the time, and then right at the close. That's the norm. All right. Yes, really. Okay, I am going to open up for general questions, and this is not about stock specific. It's about anything you've heard, maybe what blue ice is, or talk about questions about right way options versus hit and run candlesticks, and maybe the patterns that we like and stuff like that. Oh no, Doug Campbell is the King Daddy Rabbit for right way options, and Rick Sadler is the main King Daddy Rabbit for right way options. But what is Doug? Doug is the moderator for Right Way Options, the owner, the creator, the founder of it. Rick Sadler owns Hit and Run Candlesticks. I'll have to defer to Doug on that. Rick is running into some health issues, so Ed Carter and I right now are filling in for the next 6 weeks or so. But I think, let me... Okay. Rick Sadler YouTube. Here's Rick's YouTube channel. Lots of good freebies out there. Give you an idea. If you go to the videos, they'll give you an idea of the kind of patterns that he likes. And of course, then those are kind of the same patterns that we like to trade. RBB patterns, rounded bottom breakout. I like the J hook myself. That's my favorite. That kind of stuff. Bill, it's that's a good question. How are they going to recoup the money? We had a little bit of a discussion in the trading room last week. I think it was maybe on Friday. It really got hot and heavy. They may start to charge for the platform. We haven't heard anything like that. If they do, they're probably going to shoot themselves in the foot. I traded midpoints and got mid fills on my credit spread on Friday. Oh, thanks, Alan. Appreciate that. I totally spaced on that one. But I got mid fills. I mean, because what they're doing is all they're really doing is they're going to try to make up most of the money through order flow. They're going to sell the first dibs to somebody out there, and they'll pass it there. Is that best for the consumer, the retail trader? No. Is it going to hurt us right now? It's up in the air. It's really up in the air as to whether that's actually going to hurt us or not. Yeah, they eliminated profit charts, and they said that I think they actually they bought profit a few years ago, and they were having to maintain two of them, so they cut one of them out. Now, there's some stuff that was in profit that I liked that is not in Thinkorswim charts. Primarily the dividend type stuff. Okay, Dr. Hold on a second. Yep, Alan. Yeah, Doug does provide the market prep video every morning. Great, great. Michael K said you mentioned some guidelines about what stocks attract something about volume, interest, da 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 da. Okay, the volume that I want is about that I do a search on. I really want about 500K to swing or 1 mil to day trade. That's kind of what I'm looking for on the volume, average daily volume. Now I know Ed uses some combination of price and volumes, and that's cool, but I just make it nice and easy. Now the other thing is I want it to have an average to range of 25 cents or more. The more the better. I don't want a stock that's not moving because I have to make money, and 25 to 50 cents is probably somewhere around a minimum. For the lower price stocks, a quarter or so is fine. For the higher price stocks, it's going to have to be more like $1. Okay, and let's look at what I have here. Let's go look at personal there. And I have a thing called Tradable here. And I want a price history of something. Now, add condition. Now, here's the problem you've got. Okay, get rid of that. Get rid of that. Get rid of that. I have different levels of tradability. $10 or better. The reason is I don't want to buy a Rite Aid because I think it's really a bankruptcy waiting for a place and time to happen. What was the other? I don't want to mess around with J.C. Penney. This thing is going bankrupt. It's only a matter of time. Look what happened to Sears. I don't want to get caught in the middle of this. Open up one day and suddenly it gaps lower. Like if you were playing this and suddenly it gaps from 230 down to under 2. That's a significant drop. I don't know how the people from Worden Brothers are going to adjust, or if they're going to adjust their commissions, because they're using Interactive Brokers, and whether they're going to pass on the savings and you're going to still have to pay a premium to trade through them or not. I never would do that. I don't like their platform for trading. All right. So, Michael K., did that answer your question then? You're welcome. Ed, if you want to come on and say anything about LTA, I'm going to say one thing, and then I'm really ready to go back to bed and to take some more meds and go to bed and go to sleep. The LTA scanner is the most customizable, user-friendly, useful tool of scanning that I've ever come across. And when people say, man, it's expensive, it's $100 and something, $150 or so a month. I was paying for something that was less capable, $300 a month to look at these things, and it wasn't as customizable. Once I found out that Ed was doing this at that price, it was mind-boggling. Yes, the ATR for the stock, William P. Where can you see them? Where can it be put in the price bar? No, I don't. I don't think you can put it in the price bar. You can put it in the. Um, I have it up here in my toolbar. I have a my condition sets. Um, Hold on, let me see where it's at. Nope. Where is it hiding now? I'll have to find it. It's indicators. They have average to range now. Oh, okay. Great, Ed. I'll be right there. Average to range is now in um, TC2000, and you could actually add it to a column, sort it, yada yada. But I have and will post the average to range, and you can create a PCF for it and add it in. Let me go ahead and while I do that, I don't use it on here. I use it as a scan filter out stuff, but I don't watch it intraday. But let's move it over here to the slides. Ed, you got it. Okay, folks, I'm going to go ahead and sign off here, and I'll let Ed answer the PMs directly, and then I will post up the recording later tonight. All right, you guys have a great one. Have a good week. Now we have Fed FOMC minutes on Wednesday afternoon, so be careful. Aloha.